Okay, gold is at an all-time high. It's crossed 1,48,000 rupees per tola or 10 grams in Delhi. Silver has done something even more astounding. It's up 26% in this month alone since the new year, and it's crossed 3 lakh rupees per kilo. And this is not an India market story. This is about geopolitics and a possible global trade war over Greenland. And the same things at that same time has driven down our Indian stock market. So what does this mean for you as an investor, for your weddings, for your savings, for your investments? Also, what does it mean for inflation? We're going to take a look at all of those things. Should you buy, should you sell, in this video. Remember, like, share, subscribe. It will help us, of course, if you sign up for our membership, to do a better job for you. Let's take a look at the charts right now. Gold first. Gold actually went up 1,900 rupees in a single day. And if you look at it past the 1st of January this year, which is 20 days ago, gold is up 10,000 rupees, 10,400 rupees, and that's about 7.5%. The real rocket has been silver. Silver has gone up 10,000 rupees in one day, crossed 3 lakh rupees a kg. And if you look at it this year, you'll see silver is up 26% in the last 20 days. That's 63,600 of an increase in the last 20 days, and the same movement we've seen internationally as well. And while gold and silver are smashing records, the Indian stock market has been sliding. Now, the benchmark indices actually opened in the red today, and that combined with Monday's decline as well means that in just 2 sessions, the Sensex has lost over 1,000 points. Overall market value has dropped 10 lakh crore since Friday. So what is actually happening? The same thing that's driving up gold and silver is driving down our stock market, and that is uncertainty. Now, the simple thumb rule is that when trust falls, gold rises. When people don't know what to trust anymore, they don't know what to expect, then they run for safety. And what is causing a trust fall? Donald Trump. His latest threat to Europe, remember, because the EU decided that they were going to defend Denmark and Greenland against a possible invasion by the US. Trump has then announced a 10% tariff from February 1st on goods from 8 European countries, including Denmark, Sweden, France, Germany, Netherlands, Finland, UK, and Norway. He says that could rise to 25% from the 1st of June if this continues. Now, here's the twist. Trump says the tariffs will continue until Europe agrees to a deal for the complete and total purchase of Greenland. Now, that line alone has triggered alarm bells across the market, and this is not a normal trade negotiation. This is tariff pressure inside what appears to be a threat of military action. So it's really confusing because the world has never seen anything like it, and the stock markets have never seen anything like it. But this is what makes it serious. Europe is responding, and it's not taking this lightly. Europe is actually talking about retaliatory tariffs against the United States. Now, European EU officials are openly discussing something they call anti-coercion instruments, nicknamed the trade bazooka. What does this mean? Basically, Europe's legal weapon to respond to when another country tries to bully it, like Donald Trump is trying right now, is using tariffs and bans themselves. So if Trump's Greenland-linked tariff is an economic concern, Europe will respond with measures that go far beyond normal tariffs, which means it could potentially restrict American companies and their access to the European market, target services and not just goods. Remember, all tariff conversations up till now have only been about goods, not about services. Is it possible that EU will start targeting services? It could block American firms from European government contracts. It could impose tougher restrictions on investments and trade flows. In other words, it's not just a tariff slap back. Europe is signaling that it will hurt US where it hurts the most. Now, remember, at the same time, in a side note, Canada, the Prime Minister of Canada, made a trip across the world to China and said that it is going to consider other trade partners in order to free itself from dependency on the US. So all of the allies that US could take for granted up until now that it is starting to treat badly, and there's no other way to term this, starting to treat badly, are now considering retaliatory options. Now, alongside this, there's talk about Europe's retaliation that could cover around $108 billion worth of American goods, meaning exports worth that amount could be targeted by counter tariffs and restrictions. And that is why markets are reacting so strongly, because nobody knows what to make of this information. Now, it's starting to look like a serious Europe US trade war, and not a short-lived dispute. So wherever the markets smell uncertainty, trade war, inflation, global slowdown, the money rushes out of the stock market into safe havens like gold and silver, and that's what we're seeing right now. So investors are dumping stock assets and moving to safer havens like gold, silver, and even some defense stocks. Reuters notes that this uncertainty has already shaken the European markets, as well as metal-linked stocks that have surged. Now, the interesting thing here is that while gold is a store of value, silver, what is going on with silver? Why has silver shot up so much? Now, silver actually has a double identity. Yes, it is a safe haven because it is a metal with a value attached, a daily value attached to it. It's also an industrial metal, so it has other uses. It's used in making electronics and solar panels in EVs and semiconductors. And so the markets believe that on one side, trade is breaking down. On the other side, supply chains will face disruptions. Silver could spike brutally. So Reuters has already reported silver breaking that $90 per oz, earlier this month due to macro uncertainty and rate expectations. So what are the experts saying about gold and silver for the time being? HDFC Securities has actually said the rally, like we know, driven by geopolitical tensions, tariff uncertainty, safe haven demand. Sher Khan's, Mirae Asset Sher Khan's analyst has basically said that Trump's Greenland tariff risks are actually what is driving gold and silver. Now, for the stocks, I will pin that. We'll come back to gold and silver. I want to take a quick look at the stock market as well. What is causing the stock market to tank in India? Apart from the fact that there is global uncertainty, FIIs, or foreign institutional investors, have been steadily pulling out their money from the Indian stock market. They have sold 3,262 crores worth of shares from our stock market on Monday alone. Domestic investors or domestic institutional investors, so our mutual funds, our PF funds, that sort of thing, have bought about 4,284. So we've prevented a deeper crash in India because our domestic investors are buying. But the point is that foreign money is exiting, and that is putting pressure on our stock market. Also, to add to it and to make it slightly worse, earnings have been mixed this quarter. The Q3 quarter has not been great, and analysts have said that there haven't been too many positive surprises. There's no strong good news coming in domestically to battle the bad news that's coming in globally. And of course, finally, when global uncertainty rises, investors reduce their exposure to equity and rotate it, like I said, to gold and silver. So that's what we're seeing right now in the Indian stock market. Besides, remember, there's a union budget coming up. Nirmala Sitharaman will be presenting one more budget on the 1st of February, which is a Sunday. But what people are worried about this time is that there'll be some sort of fiscal consolidation, which means normally when there is an election coming up, they tend to announce a lot of spending, and the government tends to spend a lot in order to keep people happy. When an election is just over, then they announce a lot of long-term, sort of big construction projects or big infrastructure projects. But we're sort of in the middle here, and this will mean consolidation, which means the government will start tightening its spending. And when the government tightens its spending, there's less money all around. And one of the theories of what is going on in our economy is that it's largely government spending on big infrastructure that is pouring money in. The private sector has actually not invested that much at all. In fact, the private sector has been taking its money back home and not reinvesting it. And that has been a problem. That's a sidestep. Coming back. So what we are worried about, what analysts are worried about is that the government might actually tighten its spending, and that will mean lower sort of capital expenditure or capex from the government. That's not great for the market. It means less money floating in our stock market. So basically, the same global fear that's pushing gold and silver up is also pulling money out of our equity markets. And that is the pressure that we're seeing right now. FI selling, mixed earnings, geopolitical uncertainty. Now, next. What does that mean for you? Let's take a look at gold. Now, remember, India holds 34,600 tons of gold. That's roughly 88% of our entire GDP that we hold is gold, not just in RBI reserves, but sitting in our homes, in our lockers, in our temples, family inheritance, bridal jewelry. If the price of gold rises, as we have seen, it means that every single Indian family has gotten a little richer, which is a good thing. So it becomes a household wealth story, it becomes a wedding economy story. Sometimes it becomes a bit of a political story also, and I'll tell you that in a minute. But the surge is sending a message that the world is looking unstable, and this also means that people are looking at gold right now. So to give you that political story, apparently Akhilesh Yadav also came out and said that the rise in gold and silver reflects what he calls the BJP era economics of corruption, where corruption money gets solidified into gold, and he's saying that's the reason why gold is spiking. I mean, it's a political story. The real reason I've already told you, because from the time Donald Trump took office, which incidentally exactly a year ago from today, he's just thrown googly after googly after googly at the world and people, and every time this happens, more and more money moves into gold and silver. So what should you do? Should you be reacting to this? Should you be buying more? Will gold move up further from where it is? The answer is yes, because obviously the one thing we can know for sure is that the uncertainty is going to continue. So what does that mean? Should you buy? Well, the larger opinion is at these levels, which is already at an all-time high, it might not be a time to go all in. So you really have to look at what you want this gold for. If you want it as a hedge for your investment, which means you have your fixed deposits, you have your mutual funds or your stock exposure, you have everything else, real estate, and you want to buy gold and keep it as 10-15% of your portfolio in order to hedge to the other things, then it makes sense to take bites at it and not go all in. Gold may go up further because of everything that we're seeing right now. Let me tell you what the reports that are coming in. Reuters reports that gold is surging, as we already know, as the EU retaliation continues to move up. The World Gold Council notes that gold already has seen a massive 2025 and a 2026 is really strong, so it expects this momentum to continue. JP Morgan Gold Research is expecting again higher highs in terms of gold. Effectively, the reason why you should not go all in and buy a lot of gold right now is because just the same things that heated up the gold could cool it off just as well. So the trade war headlines can change overnight. We've seen that happen because that is how Trump actually manages this whole thing. If a deal is reached, then the whole thing will cool off immediately. US rates and dollar moves can slam gold temporarily. So the risk is not that the gold prices will suddenly crash. It is that you will buy here and it will come down by 10%. And you will actually lose 10% of your money for no reason. So the practical answer apparently is to do it SIP style. And if you decide that this is the amount of gold you want, either you've got like a big event, there's a wedding coming up or something, and you decide you need gold, or you just want it as an investment, to actually break it up over the next 8 to 12 weeks and then, keep buying a little bit if that is what you really want. Silver can still rise as well because it's a high volatility metal. Reuters, again in its reports, say that silver has surged towards records for the same reasons, and it could give higher returns than gold. But because of all the various things that impact silver, it also brings a fair amount of risk. So if you are getting into silver, be prepared for a higher risk than gold. So the simple sort of verdict is that gold could go up further in 2026 because of the environment that we're looking at right now. But at record highs, it doesn't make sense to go in and buy all in one go. Let's take a look at the stock markets though. If you already own good stocks and good mutual funds, it doesn't make sense for you to do a panic sell at this time. A lot of people are taking their money out of the stock market, saying that, it's going to go down, and it makes sense to take money out of the stock market. But the challenge here is the opportunity loss, because you don't know when it's going to turn around and move up. And also our Indian stock market has not taken the kind of beating that global markets have taken. And so we can't expect that it's going to completely crash tomorrow. Remember, we've stayed fairly insulated from what the US has been doing in the last 1 year. In spite of the fact that Donald Trump has been at it for a year, our market has sort of held its own. I've always believed this, that if you're a long-term investor and this is money that you're going to, use for your retirement 10, 15 years down the line, then it doesn't make sense to sort of jump in and out based on what's happening around the globe. You should stay put, and if you see an opportunity to buy more of whatever you believe in, so if you believe in certain stocks, you believe in certain mutual funds, you see opportunities to buy more, it does make sense to buy more. So we are expecting gold to climb up even further. We're expecting silver to climb up even further. We're expecting short-term volatility in our stock market, but as we've seen, because domestic investors, mutual funds, people, Indians who are buying stocks and mutual funds have been able to hold up our stock market. We're not seeing the kind of reaction to the global markets as we've seen earlier. So send me questions on anything you'd want answered about investments, and we'll try and get an expert in to answer those questions for you. Thanks for watching.